Welcome everybody. This is a very special session today. And I think with HYPE, most of you are familiar with what we're doing in the last few years. Our vision is about impacting people's lives through the power of sports and innovation. And I remember when I, as an entrepreneur, getting a third no from a big brand in London. And I really was so depressed. I had nobody to contact, really. I felt, my family was back in Tel Aviv. I remember walking on the London Bridge and looking down. And the feeling was I was on my own. If some of you can recognize this, this notion. Now, but this was around 1998, 99, last century. So, but now it's different. And I think, when we look at, you got the LinkedIn of those, the guests we have today, we have LinkedIn, we have everything around us is really so welcoming. It's still not easy, but the ecosystem and part of the mission we have is to support the startups in different ways. And I think the purpose of the session today is to give all of you, and we have almost 200 people here today, an access to how those leading investors see the world of Web3. Some of them have done few investments already. Some of them are exploring this new avenue, and really to have an open conversation about that. I remember as an entrepreneur, the way we perceive investors and the way they think sometimes totally different to what it is in real life. So you'll have an opportunity to get a sneak peek into their brains, and as always, we're doing an open conversation, non-formal, where everybody can share, and I'll just try to make the conversation as interesting as I can. Let's start with a quick intro, just a couple of sentences on each one of you, and then we also will do a quick poll to see who the startups are with us as well, and give you the answers later on. So maybe we'll start with Daniel. A few words about yourself.
All right, sure, Amir. Thank you very much. Good to be here. And Daniel Bernard, I'm an investor with Mindspring Capital. I do a little bit of angel investing as well. I'm looking at the title on the screen. What are Web3 investors looking for? Not to contradict you, Amir, but I must say I'm not a Web3 investor. I'm an investor. And Web3 is something that I think that is very important for all of us investors, especially in sports, to consider having as part of our portfolio. I recently invested in my first Web3 company. So I'm not a Web3 investor. Before anyone thinks that I'm an expert in Web3, I'm not. I'm sure I'm going to learn a lot of things this evening here. But I'm definitely a fan of innovation, and Web3 is a massive part of that. I've been fortunate to be part of the sports industry for about 22 years. Started in broadcast and media, which taught me a hell of a lot, and then opened a company for data analytics, performance analytics back in 2004, making me a very old man already. And then shifted in 2015, set up sports betting platforms for emerging markets. So I've been very fortunate to touch on a number of areas of the sports industry, and turned my hand to investing around late 2019. So I'm actually fairly new in the investment world. And as you can imagine, I'm still much more of an entrepreneur at heart than an investor. I feel like I'm sitting on the wrong side of the table sometimes, due diligence calls. And my partners have to nudge me and say, stop agreeing with the founder all the time. But anyway, that's me. Looking forward to having a great conversation here, and seeing how we can bridge between great startups, the investment community, to take things forward for the sports world. So over to the next person.
I love the fact that you bring the entrepreneurial side as well. Great stuff.
Always much more an entrepreneur than an investor.
All right, Rebecca.
I can relate, Daniel. I also come from the entrepreneur side. I built a software data company years ago in the health tech space. And so I have a lot of empathy for the founders. And actually a lot of my portfolio companies are usually the ones that call me on the phone when they're going through some sort of a crisis, because I can definitely relate. But I've been an investor for about 6 years, two of those at Yamaha Motor Ventures. I lead all the health and wellness investments there. We also have another person that, so a two-person team around sports tech specifically. We are doing investments in seed and Series A, writing checks anywhere from $500,000 up to 3 million. We tend to like to co-invest, and something to know for startups is a company like ours, we do have limitations in our ownership, but that also makes us great partners for other VCs to co-invest with. And so just keep that in mind when, approaching us. We may want you to also bring in another investor, or we can bring in another investor in the space, particularly around the Web3 space, since I don't know that there's many experts around there yet. Our vision really around investing in this space is the personalization of human health, performance, and recovery. And I say personalization because it implies a data element. I think traditionally we've spent a lot of time investing in hardware startups as a firm. We're moving a lot away from that and into more software, data, and AI oriented startups. So, I think the unique thing about these new areas emerging like the metaverse and Web3 is the ways to engage users and keep ongoing relationships and new business models. Those are the things that are really interesting to us. So that's a little bit about me. Thank you.
Amazing. Thank you very much, Rebecca. Looking for, I would say, a lead investor, which is, I would say, focused on Web3, or done few things in Web3. I think it's very smart and something we're looking at as well. Let's go to Javier in London.
Sorry, I was still on mute. So hello, everyone. My background is definitely not in sports. My background is in investment banking, hence my photograph there. Private equity, investment banking, it's at the core of my personal experience, and this of a large part of our team. So I would define ourselves as entry investors. So some kind of a hybrid, and we create companies ourselves, incubate them, and even our own ideas. And eventually, after a big shift in our strategic approach, in 2011, we decided to move into the early stage startup space, both as investors, but also something that has proved to be extremely valuable of late, particularly over the course of the last 5 years, that is incubating companies. So helping them to move from a stage where basically we receive PowerPoints, so into something that is valuable with this investment banking and private equity background that we have. And so basically, if I have to define ourselves, I would say that we invest in brains and teams, and that's basically what we like. So we are pretty much agnostics to size. We're pretty much agnostic whether is I don't know, self-describable as a 3.0 company or something different. we invest in brains and teams. And hence, we give a ton of value to execution capacities, hence commitment from those teams. And we learned that the hard way.
Learned it the hard way. All right. Thank you very much, Javier. Let's go to Matt in Vancouver.
Thanks, Amir. Appreciate it. Appreciate you guys having me on. Yeah, my name is Matt Hoffer from Vancouver, Canada, not Vancouver, USA. We're at Brickhouse. We are an early stage investor. We look at like seed, angel round, founders rounds. We do a hybrid of both advising, consulting, and investing. My background, I've worked in the NBA, built a basketball camp academy. I coached for many years. I was then a stockbroker and trader, then went into wealth management, and then started this sort of what we're doing now around 2018. Also kind of echo some of Daniel's sentiments. I'm not a 3.0 expert. We invest across sports, entertainment, and digital media. So this obviously, some of it falls under it. So we're, trying to learn and be a part of what's going on here. We are involved in 2 projects, one out of LA and one where the founders are spread out around the world. It is the one nice thing about these projects is you don't have to have a home office, so to speak. So yeah, and also a little bit what Javier said, we look a lot at the founders. It's not so much about is the idea perfect today, it's more about is there knowledge in the space, is there the connections between the founders that can help it grow, and does it have a chance to grow? So we like to get our hands dirty and work closely with the founders. So that's a little of our background.
Thank you, Matt. And as we've done this quick round, we want to dive into some hardcore questions. Before this, I invite Gomez, which is from the HYPE team, to bring the first question to the startups. We want to just get an idea of the startups with us today, and also for you as startups to see what's happening. So first question is, how much money you're looking to raise if you're raising money now? Is it between $0 to $500,000, $500,000 to $2 million? Just put it in, 2 million to 5 or more. We will share in the end of the webinar the results, so we know a little bit what is the type of startups and the ticket of investment that we have here, and what is the spread. Feel free, take a minute, press your button so we can see. Okay, thank you for this, Gomez. There is another question. Question number 2, Gomez. Now, I know most of the startups here are involved in Web3 or around Web3, but let's be more specific. Are you a Web3 startup, or you're a sport tech startup or general startup with a Web3 application? So have you set up your company in the Web3 space, or it's a Web3 application within existing other stuff you do? Or none of the above, there is no Web3 and you just came here to hear some cool discussion. That's also okay. Okay, we'll share the results in the end. Interesting to see what's happening there. All right, so let's start. I would like to start with Daniel. Daniel, if you are, as you said, coming from the entrepreneurial world, I always see great ideas, great startups, great technology. And sometimes the startups, the entrepreneurs, the founders are not conveying the concept properly, so that they are, I would say, not investable, not because of the product or because of their, from your experience, what are you looking for in entrepreneurs? What do they need to convey for you to say yes? What do they need to understand about how investors think?
I think that at the first stage, when they make that first pitch, the number of startups I see that focus first and foremost on themselves, their technology, and they're wrapped up in their own business. Whereas I want to see that people understand the market, because a startup business doesn't exist in its own right. It has to be there to provide value to the market. And if we're talking about new technologies such as Web3, that's even more the case. Someone who is completely unaware of where the market is, very nascent at the moment. Let's face it, the killer app for Web3 doesn't exist yet. It doesn't. A lot of the startups on this thing are going to say, oh, I've got the best thing. I guarantee you that it's not the thing that's going to make the big bucks in the future, because it's so new. Doesn't mean you're not in the right space. You probably are, but know that what is going to be your big win is going to be evolving over the next year or two minimum. And so as an investor, especially in 2022, I want to see that a startup understands where the market is and where it isn't as well. Because I've seen some Web3 people come in and they say, look at this fantastic technology I have, and they have no idea how to bridge to the existing market space. In fact, that's the one Web3 related investment I did make recently, was because the company, that's what they did. They enable, Credenza is the name, they enable existing sporting organizations to access Web3 technologies. So they're thinking about the bridge, which is critical today. Because if you go to any sports organization at the moment, they'll be lost. They have no idea how to interface with this. They said, look, the vision sounds great. You're going to give me more fan engagement, more ownership for the fans, more decentralization, all these buzzwords. Sounds great. How the hell do I do it? Organizations don't know. So bridging is what is important at the moment. And just to go back to your question, that's what I want to see from founders. I want to see that they understand where the market is. And I want to see that they understand who the investor is and what they're looking for.
What do you mean by that?
Well, because sometimes as an investor, you get pitched things that are completely outside your scope, and you think, I wish the person had just done a bit of research before they actually buzzed me. I still get pitched loads of stuff on biotech. I'm just sports. I do nothing else. And so why are people pitching me biotech and agritech and stuff like that, even though it sounds really cool, but I have no idea about those areas. But you got to do your research on who you're pitching. Don't just spray across the whole investment community. And understand what they're looking for. So if it's to Mindspring Capital, where I'm a venture partner, understand that we are very interested in having Web3 as part of our portfolio, but it's part of our portfolio because we see that as very innovative going forward. And so trying to fit into what we want, what the market wants, and then explaining how your technology does that. So it's looking really a bigger picture. I often find, just often like the founders that are technologists sometimes need to leave the technology as the secondary thing to pitch, if you know what I mean.
Yeah, so, not focus too much on the technology, but more at the application, how this can impact the market.
Absolutely.
And do your research.
Yes.
One of the entrepreneurs recently, one of the startups we have on our alumni, he said, I'm looking for a quick round. Please do not introduce me to VCs. It takes too long with them. Would you agree that, if startups looking to do a quick round, you should go to angel investor or not necessarily?
Well, it depends on the round. If it's very early stage, then you might want to go to angels. But there are VCs and there are VCs. It really depends. I've seen VCs, especially in the last couple of years, where there's a lot of FOMO, have been signing off investments with almost no due diligence. One VC said, can you share your due diligence? They said, well, we did more of a thematic due diligence, was the response I got, which meant we did no due diligence. They just basically signed a check. And I see that quite a lot. I don't like it. I think there's just, you should always do your due diligence. And if it takes VCs time to do it, then founders have to understand. If they have access to quick capital, then that's great for them. It really depends on the stage. I think Javier has something to say about that.
You mentioned FOMO. I heard recently a new word called FOMBO, fear of missing better opportunity. Like the next level.
Yeah.
All right. Rebecca, tell us a little bit, as a big brand, what exactly big brands are looking for in terms of Web3? And maybe if you can also touch a little bit on valuations, because I just met a startup 6 months old, valuation of 100 million, looking to raise 25 million on Metaverse. So is it going to be now the new valuations in this space? What's happening there from, I know, you know, you're just learning your first steps in the new Web3 and bold enough, I would say, to explore that now.
Yeah.
But what's your thoughts and how does your corporate look at that?
Yeah, maybe I'll start with the valuations right now. I think, the valuations, from what I've a little bit seen, is some of it has to do with the ownership models of the companies themselves. And there's an inherent tension between investors and a distributed ownership model, right? When I'm giving money to a startup, and this is something a startup founder should understand when they're fundraising from me, is I'm trying to hit certain ownership targets and for the check sizes that I'm writing. And so when you have a distributed ownership model, there is this tension. You want to decentralize the ownership, and investors re-centralize some of that ownership, right?
Can you explain this in simple words?
Yeah,
so I can understand.
So the decentralized ownership model, you know, basically giving the users or the participants ownership in the company. Now, not every company in Web3 or you know, the metaverse are going to be in this type of ownership model, but the ones that find this balance where they're the balance is sharing the ownership amongst the members or the users, and then also can find that balance with investors. Usually investors have to sacrifice a bit of their ownership. And that's when you see some of these really crazy valuations. Now, valuations across any industry right now is just extraordinarily high. It really is a founder's market. There's a lot of money in the market. So if you
maybe only in San Francisco, Rebecca.
Well, you know, I think if a founder really wants to fundraise and they're focused on that, they can probably find the money. But that's one of the things that drives some of this crazy valuations. Now, no, for a firm like us, and for a lot of traditional investors that are still trying to formulate their strategy around this space, we still have those ownership targets. So just understand that, you know, there is this tension there, and be aware of that. Now, for a brand like ours, Yamaha, and I'll speak specifically to Yamaha, how we can get involved in companies like this. I think it's important. I think it's important to understand also that, you know, where our strengths are in the hardware piece and robotics, and we have huge footprint of sales and customers. And what we're looking for, and this is also unique to us, is we're looking for startups to collaborate. It's not necessarily an acquisition for us ultimately. We're looking for ways that startups can help us develop our you know, maybe we can develop a complementary business so that we can build an ecosystem and all of us rise together. So we're really looking for something that can also help elevate and grow the startups. And we have huge footprint of distribution and relationships with sports teams. So there's a lot of benefits for the startups to work with us as well. But I think when the things that really appeal to us are those, well, for one, it's getting out of this transactional model. You know, we sell units, right? But I think one of the really unique things about, you know, just any of these startups that are in Web3 or Metaverse or NFTs is not only the new business models, but also the ongoing communities that they build. Take NFTs as an example. It would be a huge mistake for a company or a brand like ours to look at an NFT as a collectible and a new thing to sell. When if you really look at NFTs, they're building these very strong communities with exclusivity and ongoing benefits. And it's really a way to engage the users or the fans, or however you want to describe that user base, in an ongoing way. And that the ones that are really successful keep that going, and there's eventually going to be some evolution even into the metaverse. We don't know what that looks like in many cases, but that's something that a brand like ours can learn. It's not the actual collectible itself, it's some of the other intangible benefits to engage and maybe monetize the user base. So that's something that's really interesting for us.
Very good. I liked, there is buzzwords now, and which we're all learning as we march, and one of them is the co-creation, and building together. And there was a big canvas now. I don't know if you saw, millions of people just put 1 pixel each, and they created their own. I think it was on Reddit. Crazy.
Oh, right. Yeah, I did see that.
Created there. So with the co-creation and the fact that you mentioned that you're looking to create together, and you're using your, of course, amazing network and social base, but also looking at the new models of, as you called it, the decentralized or the NFT new. Some startups are raising money now on NFTs and tokens, and probably some of them are with us today. And I don't know if we are, how do we look at that at the moment? And you mentioned the impact that if they give, like, I don't know, 10% or 20% to their co-creators and contributors as an NFT, as part of the deal, that dilute, of course, their ownership, what the impact on us as an investor. I think this is something that, if I understood that, you raised, as a topic to look at, whether you still would like to maintain the threshold that you have there. So
exactly, because we still have a lot to learn from these models. They're super interesting. But I think also for a company like us, just digital experiences in general, and that goes into the metaverse, is something that we're very, very interested in. When you look at our demographics, they tend to be a little bit older. And so trying to bring in some of these new experiences and engaging new audiences is something that would really attract our attention. So really, not only the business model, but also the approach to maybe new markets and get access to young audiences. It's also in your case, this is also an interesting angle to look at from a investment proposition. Absolutely.
Excellent. Matt, maybe you can share with us a little bit about, how do you, when you look at startups, how do you think they need to best position themselves for you to really look at them carefully in the context of this new world?
The first part is the clarity in your pitch or your message, like really being able to distill down to its simplest form what you're doing, how you're going to execute on it, but also how investors are going to make money off it. In a traditional stock world, when I used to trade stocks that were already publicly traded, we all know how you make money, right? Stock can go up, you can short it, you can buy on margin, buy options. None of that happens in this world, and you have to be willing to take that 5, 6, 7 year approach with a startup. But they also have to be willing to take that 5, 6, 7 year approach, right? We see a lot of, with Web3 being so new, especially the term, and everyone's racing towards it because money's being thrown at it. You really have to sift through, like, are these entrepreneurs ready for the grind of every day, nonstop, 7 days for the next 5, 6 years or something? Or are they trying to make quick money by creating a token, putting it on the market, dumping it real fast and moving on to their next great idea, right? And I think that the people that are supporting the projects outside of the traditional investment community aren't necessarily as aware of what's going on behind the scenes, right? Because you're printing tokens out of thin air and you're putting them out to the market. And so you now have to hope that that entrepreneur is there for the long run. So we really look at kind of what what the entrepreneurs have done in the past, what projects they've worked on, execution on those projects, the ability to grind day in and day out, right? So that's one of the first things, is getting to know. And I think that's the other thing when you mentioned earlier about some companies wanting VCs to move faster. I think there's a shift where, if you're investing in the traditional world where you're getting equity, getting voting rights, you have some control. Whereas in some of these cases, you want to get to know the entrepreneur. That takes time. It's hard to throw your money at someone you've just met, right? We all do our research when we make investments, and getting to know someone is part of the research, right?
Yes, and anything that will enable us to get to know them, and that's So, the ability to build a community as an entrepreneur, of community of investors which are following you, even if they haven't invested, but they know you, they see what your progress is, and later on they may jump in. So that's
the other thing I always hear is that startups hate it when VCs won't just say no and move on. And that's fine if you just want to get a yes or a no, but I think it's also valuable to have some people, as you just said, that follow you. Even if they don't invest in you, they might advise, they might mentor, they might just be a proponent of you, or they may even just write a personal check for a small amount because they like the concept, but it maybe doesn't fit taking it to their investment community. And you don't have to accept that, but I think sometimes it helps to accept that. The number of times throughout my life where I've stayed in touch with someone, even when they said no, but they've made great introductions or they've turned out to invest in a future project. And then that goes back to long-term thinking rather than short-term, right?
Absolutely. Going back to co-creation and working together. Great. Javier, coming to you, I'm listening to a few podcasts. The team is laughing at me. I'm all the time around podcasts trying to learn something new all about this new world. And I recently heard a guy which was ex-VP at Facebook that created a fund investing in co-creators, not startups, and getting 5% of their revenue for 30 years on everything they do. It's like they're setting up a small LLC for everything this co-creator is doing on YouTube or anything else, or developing something, and they're investing in them and getting 5%. Now there are new models now coming up, and we're learning. I know, Javier, you've been already invested in and involved in few NFT activities. Maybe you want to share what attracts you to that, and how do you feel about getting into this business? I think you're on mute. Can you hear me, Javier? I think you're on mute.
Oh, sorry, I was on mute. Sorry. So just a quick observation regarding the business model you were describing before. I mean, it was properly describing Jerry Maguire's movie. So I don't think there's anything new about agents. So that's what basically these guys are doing, which it's okay as far as you have the other part signing that in agreement. So I think it's fine. And when you have been at one of these very large corporations in the past and you have like a name with you, it's probably easier to sign these kind of deals. Now, regarding your question around our NFT and tokens investments and stuff. So I was not particularly attracted about that business, to be honest. I'm not an expert. I'm a financier, so we kind of hardcore financiers tend to be quite agnostic regarding hype for financially related things, if you know what I mean. So I am not an NFT fan as far as I can see them today, as collectibles and people buying zeros and ones for whatever the value, whether it's $1 grand or 10 million. So what I really loved about this company in particular was the people, as said before. I really like the team. I really like their commitment. And of course, they are experts in the blockchain, smart contract, NFT, crypto space. So yes, they are the experts. We are not the experts. They are. So we learn from them on a daily basis. But what we liked about these guys, what we really due diligence well, was them. So we like the team. We like the commitment. Of course, they are experts, and they had a different approach into, let's issue NFTs that are not just collectibles, which are like really, I mean, for me, are completely, I mean, for me, and that's a personal opinion, are useless. In this case, we went to FINMA, we went to the Swiss regulator, we paid a fortune to the lawyers there to have FINMA regulated crypto and to have FINMA regulated instruments. And then we issued NFTs that are utility. They have a utility backing it up. And behind that NFTs, behind that crypto, we have a real tangible business. So somehow, everything crypto, everything NFT is securitized. And for us, hardcore financiers, securitizing, collateralizing, it's at the essence. So we don't feel like we are selling, like, as we say in Spanish, smoke to people, but it's something real. So that's what really attracted us to them, and we were attracted, as said, by the team, their commitment, and their knowledge of this space.
Amir, I want to just second
Javier.
what Javier says as well, because this is, I think, a really important thing to understand, is that a lot of these tokens that you see, if it's money cannot be made just for money's sake. There has to be some business value here. And you see a lot of these, excuse my language, shitty tokens out there that are, it seems like it's so clear that they're just trying to create a bit of a buzz, get a lot of money that goes up to the top few here, and that's it, sort of a get rich quick scheme without actually creating any business value. And that's just going to lose in the long term. For sure, some people might get rich quickly, but it's only a few at the top. And so we've talked about utility in tokens as being absolutely critical. And so people are starting to get a bit clever, and they sort of dress up their shitty token with a bit of fake utility. And as an investor, I think you've got to be really, really careful to just ask simple questions all the time. Is there any business value provided here? And secondly, and is the token the way to get to that business value? The same things apply always. You know, there's nothing new here. It's just a way to provide more business value. So just completely seconding what Javier said. And I think in this day and age, when a lot of founders are sitting there and they see all these, you know, valuations going sky high around them, they think everyone's getting rich quick and they want to get rich quick too. There's no quick money, not real money. Anyway, you've got to work hard, and going back to what Matt said, you've got to go through the grind and learn the business and provide value. And if tokenization or Web3 or any new technology is a way to get there, that's the way to get there. But the same rules apply always. And I see too much of this, you know, sort of fake utility around tokenization. You've got to really realize if there's real utility there, and there is, but it's not with a lot of these tokens that I'm seeing out there.
You know, Daniel, I read a little bit of your, from time to time, your posts, and I see a lot of, I would say, good cause behind what you're doing. Yeah, like, you know, looking at impact and positive impact. And, you know, part of the, you know, decentralization and this new economy, a shared economy and passion economy, it's also about that. And without the cynicism, yeah, do you think that there is more, I would say, feeling of shared, of abundance, of working together, or it's just buzzwords and nobody cares?
So my worry is that a lot of it is just buzzwords, and people are just jumping on this. Oh, look at this fantastic, we're going to share, and it's going to be democratized and whatever. And they don't really care about that. Some people do, and that's why it's difficult sometimes. You need to try to differentiate. And I think there's so much good that can come out of using blockchain technology in order to share that around. And going back to what I think Javier said as well before, it's there's there can be a lot of value through that, but it has to be for that business purpose. And it's such an early stage that I see a lot of people going off in their other directions, because really all they're trying to do is make that quick money and not really thinking about the impact. And sometimes you've got to be a bit careful with who you back.
I think the other thing too, what you're saying, Danielle, which is important, is even if you try to decentralize something, the founders are still central control at the early stages. And so going to what Javier said, you've got this fake coin that's not really have any underlying value, centrally controlled by the founders. I come from the stock markets. That's the perfect way to run a pump and dump. You know what I mean? Because you spend hundreds and hundreds of thousands on marketing to drive your coin up. And whatever escrow and resale restrictions you have placed on the coin, you always have the founders with a chunk that they can dump as fast as they want after they've moved it up. And then you have young people who actually want to be in this space and believe in decentralization in the community, but the guys running the project don't actually. They just know that there's enough suckers out there that they can unload their coins on them.
Exactly.
And so, yeah, I really like what you're saying. It's got to go back to, are you building something real and willing to stick it out? And man, like if you really want to build a coin and have this new age of doing it, well, then lock yourself up for 3 or 4 years so that none of the insiders can sell anything, just like a traditional VC investment where, but yeah.
So we just very recently got involved with a company that is landing on I would say, uncharted territory. Again, we fell in love with the team. We fell in love with the guys. We really like them. We saw their commitment. We saw their technology. Their technology is bomb-proof. So we suggested to make like an strategic detour towards a space that, I said, is uncharted territory. They loved it, and we have created a spin-off from that initial company in which we got related first. And here there was this discussion going on regarding, should we have a crypto? And my vote at the board was definitely no. Because first we have to prove traction. First we have to prove that we have a real business backing it up. First we have to prove that we have real users to it. And so we decided finally to issue an internal token that's pretty much like a reward loyalty coin. And as Matt was saying, and we both come from similar financial background, in finance, you have the primary market, which is the issue market. So sometimes you look at the tokenomics of some of these coins and you say, who on earth wrote this? Because definitely, if you inject such amount of liquidity into an illiquid market, the offer side is going to massively overweight the demand side. Hence, your token is going to drop like crazy with very few chances to recover. So that means that the initial investors are going to be massively screwed up because they bought something at a price of 100, and suddenly they have to cope with a token that is worth 1. That means that you have to go 100 times on top of the existing value when you have no collateral, when you have no security. When I'm talking security-backed security, so collateral, securitize anything. I'm not talking security token. When you don't have that, your expectation to recover that, it's immensely low, if any. So creating this initial buzz internally with your own community on a primary market that you control, that is completely agnostic to the issuer, so you can issue on a reward token, you can issue as much tokens as you want, as far as you keep adding services and providing more utilities to your internal token. You are deregulated, completely deregulated, because you are not providing a fiat currency exchange, or you are not sort of pairing it with Ethereum or any other of the large cryptos out there. So that's basically an experiment that you can run in-house. And you can run in-house that experiment for a certain period of time, prove you're right, generate some traction, and then eventually when you convert that into a token, you already have a community. Now, most people think that let's go out there, let's sell it to these guys at, I don't know, 10 cents on the dollar, and we will be raising, whether we raise a couple million, 3 million, 4 million, dude, this million come for free, and we are not giving away any equity. Mistake. Wrong, because you are going to hit that nail once. But then your name and your credibility is screwed forever, man. You have to realize this is a financial market. Like it or not, probably 6, 7, 8 years ago, there were no financiers in relation with this market. Probably it was like that. I wasn't even there. So I don't know about it firsthand. But what I can tell you is that today, people like myself, people like Matt, we are here and we understand financial movements, financial markets, and this whole thing needs to make sense. Because eventually, as far as DeFi is not there fully established, we have to understand that any token is worth just its counter value on any given fiat currency, probably US dollar. Like it or not, this is how it is. So I think it's a very, very sensitive matter.
Thank you very much, Javier. And I see from the response here, people are, I think like the clarity you created here from your perspective. I want to maybe invite us after hearing this first round of, insights from you to maybe talk a little bit about an opportunity for the startups which are here with us today. We always say that startups are looking for, usually they're looking for two things. They're looking to raise money, but of course they're looking for real brands, partners to do business with. And I want to share a quick opportunity here to pitch in front of Brand, which is happening in the next couple of weeks. Before this, just quick, Javier, you talked about, creating a community. And I think part of the idea is really there is a huge community now around sports, around sports tech, around the co-creators, being, out there in the sport tech universe, and to be able to engage with them. I think in an early stage, it's very important. Now, just to look at the figures here, $9.3 billion, that's investment. It's not a, market cap. It's a real investment in the sport tech space in 2021, 9.3 billion. The top 10 companies worth is 49 billion, just the top 10 companies. And here you see on the NFT from 2020 with overall market size of 100 million to 21 billion in 1 year. And of course, the metaverse as well, where this is going. Now, I want to touch on just take 2 or 3 minutes. And I know most of the startups here are in their road to move forward fast. We've created a specific opportunity. I know some of you already are part of that and registered, but I know there are some here that haven't. And I want to just remind you, how does it work? And these are the brands that are part of the HYPE ecosystem. And I want to share with you the document we have for the brands. So all the about 100 brands registered to pitching sessions, which are divided for 5 topics. Okay, we have 400 executives registered for one of those. Each one of them is happening twice. So fan engagement, if you're a startup in the fan engagement and loyalty, there will be around 20 brands sitting in this room listening to your pitching. The same here is monetization, content and brand awareness, marketplace and commerce, and the physical and digital applications. This is, and you can be in multiple rooms when you're pitching to the brand. Yeah. Now, if you see in terms of this, this is the sum of the brands that register to those sessions. Yeah. Now, what I want to do now, the next Tuesday, we are now Wednesday, next Tuesday, there is the onboarding session for this pitching session with the brand. And I know some of you started filling it in but haven't completed. So I want to give you now 1 minute opportunity to do that. And Gomez just put here the link. It literally will take you 30 seconds to fill it in. You can see it now. Is it on the chat, Gomez?
Yes.
Or on the Q&A?
In the chat.
In the chat. So this is the form you will see here, which is basically very simple. You go down here, apply now, you put this, just the name, organization, position, website, relations to Web3, how much money you raised, if you raised, and that's it. And you're in. You're in for the process, so we can evaluate you. Take 2 minutes now, just fill it in. This will enable you to pitch. Now, the beauty about this program, that you're only part of the program if you are selected to pilots by the sport brands. It's none, we are not holding the, the decision in terms of who can solve the solution for the brands or not. We are allowing the brands to choose if they want to do a pilot with you or not. That's the only program that allows you to be chosen to a pilot by the brands.
Amir, just jumping in, yeah, the competition is fierce. In the past 10 seconds, we've had Mohan, Femi, Zahin from WeKick,
okay,
Simon from Runner Up. Things are moving fast. Keep it going.
Thank you, Dovi. Now, Gomez, while we're waiting for that, can you share the outcome of the poll from that we did as we started? The first question. All right. So the first question was 26% of the startups are raising up to 500, 44% are raising between 500K and 2 million, 23% 2 million to 5 million, and 7% are raising more than 5 million. Okay. Yeah, Amit is asking if you can share the link again here, Gomez. You can share the link again for the startup so they can pitch. All right, the second question we asked is about whether you're a Web3 startup or you're a sport tech or generic startup which is doing a Web3 application. What was the outcome? So 60% are a direct Web3, and 23% are not direct Web3 but have something related, and 17% are none of the above, nothing to do with Web3. Quite a lot, actually, 27 startups. Okay, good. So thank you all, and if you have submitted that, you will get an email from us. And I want to do a quick just looking at, Rebecca, let me ask you this. When you're now looking at your strategy for 2022, and you can choose which startups to, I would say, to invite to a discussion, initial discussion, what would that be? What is your, I would say, ideal size topic, for people to be very, focused now, and for you not to be bombarded by irrelevant solutions?
Thank you. Yeah, I think I talked about, just categorically, these digital experiences. I think we're open to a lot, but, when I look for startups in the seed or Series A area, there are, generally, I'm looking for an unfair advantage in one of 4 categories. Now, if we're bringing it back to sports tech, I want to preface that sports tech traditionally has been a very competitive area for startups. And so, this is going to affect how I think about the startups and what they need to have before they come to me. These 4 criteria I'm looking for, it's product, vision, the team, and traction. And so usually early stage startups, as I think somebody mentioned before, tend to be very product focused. So a lot of it, will be very product oriented. That's not going to usually be the unfair advantage unless you have something truly unique about the technology or the business model. The vision, I think, traditionally in sports tech, it's hard to get a huge vision like Hyperloop or something like that. Although I think with those 2 categories, the product and the vision, we have this unique time right now with Web3 where suddenly you do have something unique about these categories. So I think there is a story you can bring out there now. But really, when we're looking at early stage startups, the most important thing will be the people. And then in this particular category where you're trying to engage users, it's traction. And so when I look at the people on the team, what are your unfair advantages that you bring to the table? What sort of expertise do you have, either from this industry, from the technology or the product standpoint, or from a customer acquisition standpoint? Those are the 3 things I'm looking for on the team. And then I mentioned that, in this particular area with, health, wellness, sports tech, some initial product market fit, engagement, and traction is still going to be important. So I'm going to be looking for that. And that's how I know that in a crowded space or competitive space, you really are onto something and you're standing out in the market compared to the rest, and you really can make some headway there. So that's what I'm looking for when startups are coming.
Great. And the typical ticket you would be looking at usually would be $500,000, million, 2 million, or less, more?
Yeah, I think for this space, we would start at $500,000 and maybe even go up to 2 million, depending on the round and the stage and the people around the table.
Got it. Excellent. Thank you very much for this. Matt, what about you?
Yeah, I think one of the first things I talked about earlier was getting comfortable with who the entrepreneur is, and understanding everything else going on. Like every one of us has tons of things going on in our lives, right? Whether it's family, financial, issues at home, whatever it is, you really got to understand where this entrepreneur and their business fits in their life. If it's their big focus, had they been through the ups and downs before, you had a setback. It doesn't always have to be a business setback, a personal setback, financial setbacks, whatever it might be. How did you overcome those? That's why I take a little bit longer sometimes, is because I want to really understand the person behind it. And then to speak to what Rebecca was saying is, yeah, the product or the platform or the application, whatever it is they're bringing to the market, what's the market like for it? Who else is out there who's competing with them that may have more advantages, less advantages? And then this round is just your starting round. what are you going to need in the future to reach a scale that returns money to investors? It's great to get your first round off the ground, but then what comes next, right? And so, and I also think about, can I help with that? Like, is our contact group, or are we capable of then helping them on that next round, that future round, regardless of whether it's a follow-on or introduction? So I really focus a lot more on the personal side, obviously taking into account what the product is, the market, and how big this could be, right? But we start so early with entrepreneurs that we also know that whatever they pitch us today might not be exactly what it looks like tomorrow. You know, there's going to be some sort of evolution in it, or they have to adapt to a change in the market because the space moves so fast.
Great. Maybe Daniel, also as an entrepreneur, if I'm a startup now looking to raise money in the next 3 months, what do you think the fastest way I can do it?
Fastest way.
I think this question goes to the head of most of the people around on the call.
I hate that question, Amir. I hate that question because it's as if like, how do I make money quickly and everything?
No. It's how I raise money quickly so I can grow my business.
So, well, I think
you've done it yourself, I'm sure, in some stage, raising money quick.
Well, so let's think. I mean, I think the important thing is going back to what I liked about what Matt said just now. Adaptability is critical. Okay, I like it when an investor tells me, not an investor, an entrepreneur tells me that I don't know what's going to be in the next year. That I'm keeping an eye on how things are moving, especially in a technological focused market. I like it when people say, listen, I don't know what the future holds, but I know that I can adapt and change to whatever happens based on my character, my technological ability, and all of that. And if they can back that up with their experience, for example, Credenza, who I invested in recently, it's very difficult to compete with Sandy Count, who's a serial entrepreneur who's had 2 good exits, a blockchain expert. He was an easy guy to put money behind. Do you see what I mean? And so that's a bit unfair for, let's say, the young entrepreneurs that are on this call. They're thinking, well, how can I compete with that? So you've got to, again, build up your experience, but understand that you don't know where the market's going to be going in the next 2 to 3 years. But show me that you're aware of that. Show me that you can pivot quickly to wherever it goes, and show me that you understand the market today.
How important is traction for you?
Normally in most investments vary. In Web3 and those sort of early stage technological investments, a lot less, just because it's very difficult to get and show traction at the moment. Okay, so if it's the more traditional technologies, I'd say, yeah, if it's going to be, I want to see your lifetime value of your users. I want to see those things. But in Web3, I think it's more understanding that these guys, going back to what Javier said before, this is the team that will know how to take advantage of the opportunity as it gets presented going forward. And we don't know what that is yet. Okay, so it's even more about the team. It's always about the team. It's even more about the team in these sort of early stage technologies. And it's difficult to show traction in this at the moment. I think it's much more important to say these guys will know how to take advantage of it as it changes.
Good one.
I concur with that. With the right team, you can have a lot more faith in taking risks without some of these other.
Now, speaking about teams, let me challenge you a little bit. If there is an entrepreneur here, which is great, but is like one person, one man band, or maybe two, you need some strong people around him. What would you do to get some really strong people around you so people like you will say, yes, you have a good team?
Who's the question posed to?
Any of you.
I've spoken enough. Let someone else talk.
Javier, where do you find the best people to join your startups? I know you own few.
I don't know. Amir, it's a matter of having grown your network sufficiently to probably know a bunch of people that are worth and that are capable of running things. I mean, honestly, I don't know. I mean, we have never asked ourselves a question like that one. So for us, what we know for certain is that we have seen a lot more bad ideas turn into good ideas because they were correctly executed by a good team, that we have seen the opposite. Extremely brilliant ideas with very poor teams behind them that have gone then instantly to the grave. Well, instantly or within 12 months or 18 months, I mean, whatever. So for us, and I would like to describe ourselves as kind of a human-centric type of unusual type of investor or something. I mean, however you want to call us. We don't like the financial approach. We know enough about finance to dislike that approach. Analyzing Excel spreadsheets. We receive a ton of deal flow a year, and you know this pretty well, Amir, firsthand. We receive a ton of deal flow. We receive tons of investor decks containing amazingly well executed Excel spreadsheets. And I have never, ever in 30 years seen one single Excel spreadsheet that has come to fruition as it was explained. Never, ever in my entire life, whether I was in investment banking, working for larger corporations, or in the startup world. Never, ever in my entire life. And that includes our own elaborated Excel spreadsheets. Because this is like going to a casino and telling your friends, oh, yes, I always bet in the roulette and I always win. No. Whoever is telling that is lying. So even our own Excel spreadsheets have never been executed as we planned them. So for us, if we see a ton of Excel spreadsheets, we basically tend to, send them to the shredder like rapidly. We want to talk to the guys.
I never bother with spreadsheets, right?
Paper is system material.
The point that we're all looking for a very strong team is well presented. A few questions I want to touch from the crowd. First of all, the obvious questions: how people can reach you. I would say LinkedIn is okay. Yeah. So I think we've shared the LinkedIn of our panel today, and maybe Gomez, you can share it again so people have it handy. In terms of percentages, is there like rule? There is a question here, I think by Erica. Are you looking to at least like, is there a percentage, like minimum percentage you would be looking at, Matt, or that's vary? If you have a strong lead investors, you're okay with 5-10%, or you have a minimum?
No, there's no, we'll look at the deal first and make those decisions after.
Unlike Rebecca, which is looking for a certain threshold.
Yeah, no, we're not big enough to demand that we own a certain X of a company. I mean, we're
What's
starting
your minimum? Sorry, Rebecca, what's your minimum?
Well, I can have those conversations directly with the founders, but we do have a range. We have like a range that we're working with. We do have sort of a minimum target, but also we do have that maximum threshold that I mentioned before that will allow us to partner with others.
Good. Any other questions to the panel to wrap it up?
If I may add something that is valuable for the founders, don't put too much pressure in discussing percentages. You can have a guy buying 2% and it all depends on the term sheet. You can be buying 2% and then having the founder signing a 10x liquidation preference, and then you are fucked. Sorry for my French. So don't discuss much on that. The attention should be put on the term sheet, period. We have seen total disasters executed by investors committing a very small amount of money and putting pressure on the term sheet, putting pressure on the liquidation preference or in anti-dilution clauses, and then your deal is gone. So it's a matter of having a proper balance. That would be an advice.
Okay, somebody said Javier is fun. Ooh. I would take it as a compliment, Javier.
One, sorry?
I would take it as a compliment.
What? No, sorry, I don't know.
Javier is fun.
Well, you told us it had to be a fun discussion. I'm just following your lead.
All good. Yes. All right, let's wrap up. Maybe with I like the direct approach of Javier. Of you don't do that or do that. What is like from the stomach? If you need to give one thing that will serve the entrepreneurs. Let's start with Matt.
You know, it's funny.
Like this, if I put a gun on your head, and this is the last thing you can say to these warriors, entrepreneurs, which are having the most difficult journey ever.
Why is it an advice on the difficult journey, or just a
no advice to what to do or not to do from your perspective?
Yeah. One is don't bullshit your investors, because as Javier said, you got one chance in this life to like maintain your reputation, and the second you fleece people, you're not going to fleece a second, a third, or fourth, because the world's getting smaller. We can all communicate on LinkedIn. We can all reach out by text. We've all been on panels, whether it's new to the
Very
industry.
Soon
like
we will see everything on blockchain, so you cannot delete it.
Maybe, right? I mean, a lot of people want to stay off blockchain and be anonymous, or use blockchain to be anonymous,
Good
which
luck
I find
with
funny,
that.
funny as well, right? Yeah. So I just think you got to be, you got to be a salesman, but don't oversell to the point where people can see right through you. And yeah, I mean, that's a simple piece of advice, but a lot of people they live in the now rather than thinking long term. And
good one.
Yeah.
Rebecca?
Yeah, if you're an early stage founder raising a seed round, and particularly if you're a first time founder, or if you're in a region where you know, maybe it's hard to network, I think really treat fundraising sort of like a sales process. You're getting to know folks, but you're going to have to talk to a lot of people, particularly if you're a first-time founder. I know it's unfair when some people walk in, have a few conversations, and they get funded, but that's not the norm. When I did my first fundraising, I talked to almost 80 investors before I closed the round, and that was an efficient process.
Very efficient.
Some people it takes double those conversations. So really know what you're getting into, and have that expectation. I think one of the mistakes that I see first-time founders make is trying to nurture too much first, the 4 conversations, and not moving on. So I think really be prepared for that, and you'll find the money. The money's out there. Just keep moving.
The money's out there. Absolutely. There is tons of money out there. Thank you very much, Rebecca. Let's go to Javier and then Daniel for a final word.
Well, in Spanish, we have a quote that says, "Consejos vendo que para mí no tengo."
Oh, sounds great. What is it?
Well, I don't know how to translate it into English, but
oh, you have to, please.
I wouldn't dare to.
Tango is you have. I have it. Yeah, I have.
So it would translate as something as, well, don't ask me for advice because I don't have them even for myself. So it would be something like that. It's a very, very, very old saying in Spanish.
Okay.
So the only thing I dare to say is be prudent and think long term. I mean, this is like a marriage. Whenever you have an investor on board, you are marrying, and you have to take it seriously, man, because a ton of screw ups you see later are coming from wrongful marriages. So think long term, evaluate properly. Probably it's better to be accompanied by someone that can help you out in the process to reach a potentially good marriage than trying to marry at first, if you know what I mean. So sometimes you are looking at a nice girl, that the smartest thing to do is to approach her friend, which you are not really interested into, that she's the one that can bridge you with the nice one, if you know what I mean. So I don't know if it's a politically correct.
I'm all over the place, but I think we got in general. Thank you, Javier. It's about choosing right and looking for a good fit and not a quick buck. Thank you for that. Daniel, from your perspective.
First of all, it's a shame that when I was single, I didn't go to Javier for some dating advice. I might have been able to, I don't know, but although it ended up okay for me, thankfully. But I mean, look, all the others have said, I think, all the best things. Just to, really stress the thing that Javier just said now. The world at the moment sort of pushes everyone to think short term, more and more, and you've got to force yourself to think long term. You've got to force yourself to go against that drive to make a quick buck. There is no such thing as a free lunch. And if you get a free lunch, someone's paying for it, okay? So you've got to realize that. And so you've got to work hard, and you've got to think long term. And I want to touch on something specific on Web3 that Javier spoke about earlier on, and I don't think we spend enough time on it. You spoke, Javier, about FINMA regulation. Okay, and I think that that's something that I think I would recommend considering, because I think that regulation is going to come in some way that will find out a lot of these crappy tokens, as we called them before. And if you've taken the time to go through some sort of regulated approach, and it might cost money and it might take time and it might be all those things you don't want to do as a founder, but that's what's going to serve you well in the long term. And that's all ties into that longer term view. And that is my opinion. You spend 20, 30 years in a career and you think, how did I get here? Well, one day at a time. And it's just, that's how life is, one day at a time. So take your time, think long term, and be honest. Be honest.
Yeah. Another cliche, it took Messi 19 years to score this magic, and it takes time. It's sometimes very difficult. But it's very exciting, and we are, I think, very fortunate, all of us, to live in this day and age where there's so many great opportunities coming up, and I think also for the good of, with all the cliches around it, we are now organizing, alongside the World Cup, we're organizing a sport metaverse week, like you had the fashion week. But a lot of this is about co-creation. It's about fans of England doing something with a peace message to other countries, like whatever, yeah? And it's all about creating together. And I think we have an opportunity and responsibility as investors, as startups, certainly with what's happening now in Ukraine, is, to do good. And I think this decentralizing new economy gives us the opportunity to do that. But it takes leadership, because, as you said, there are so many, cowboys around, and like anything. But I think, as you said, as an investors, we are also looking for things that are making things better and have an impact. And because when this is there, and as Rebecca said, the vision and the team is already have this as, I would say, it's part of the culture, everything works. And it also helps with the feet of the investor, because, you speak the same language. So we took a little bit longer than we thought, but I think, and from the feedback I get here, I think most of the people enjoyed. Not only Javier, I think all of us. So thank you again, all of you, for joining. First of all, our guests today, I think each one of you gave different angle and interesting insights into this new world. We will continue to bring some great content. In a week's time, we're doing an event with brands, top sport brands. The biggest brands will come here, so startups will be invited to hear how they're looking at Web3, which should be interesting. And I want to thank all our guests today, all our startups. I see some mentors as well joined us. Have a great day, great evening from Tel Aviv. Bye for now.
Bye from London.
Thank you.